On Sunday, President Trump rejected Iran's peace proposal on Truth Social. Quote, "Totally unacceptable." On Monday, he told reporters in the Oval Office that the ceasefire is, quote, "on life support." And today, despite all of that, the S&P 500 and Nasdaq both closed at fresh all-time highs. Welcome to Monday. The S&P 500 gained 0.2% to a record 7,412. The Nasdaq added 0.1% to a record 26,274. The Dow rose 95 points. The Russell 2000 jumped 0.8%, also hitting records. Small caps participating with the big caps is what a healthy rally looks like. Except today wasn't a healthy rally. Underneath the records, the story was different. Over 55% of U.S. stocks declined today. Only 42% advanced. The volatility index jumped 7%. The 10-year Treasury yield rose 4.5 basis points. Brent crude rose 3% on conflict escalation concerns. Copper closed at a record high. Every indicator traders use to gauge fear or future inflation moved higher today. But the indices, weighted toward the largest tech names, didn't notice. Even within tech, the split widened. The chip producers, AMD, Nvidia, Broadcom, all gained 1 to 2%. The AI hyperscalers, Meta, Tesla, Microsoft, all fell 1 to 2%. Same trade, different sides. The market is still buying the AI infrastructure thesis, but it's getting more selective about which names it trusts. And the bull case got institutional backing today. Yardeni Research hiked its year-end S&P 500 target to 8,250, up from 7,700. That's 11.5% above Friday's close. The quote, "I've been bullish, but not bullish enough." The earnings estimates of analysts have been phenomenal. Wall Street strategists upgrading targets at record highs is the kind of thing that historically marks tops. But the same logic applied at 7,000 and 7,200, and the rally kept going. So whether this is institutional capitulation or institutional confirmation depends on which side of the trade you're on. Last week we coined the peace trade to describe a market that was pricing in an Iran deal. Today the deal is, in the president's words, on life support. The peace trade is dead. And yet records still happened. That's not because the news didn't matter. It's because the market has decided what stories it wants to hear, and Iran isn't on the list anymore. So what do you watch from here? 3 things. 1. Whether Iran retaliates physically, not just rhetorically. Oil rose 3% today on rhetoric alone. An actual escalation in the Persian Gulf could push it to 7 or 10. 2. Whether the chip-vs-hyperscaler split widens or reverses. If hyperscalers keep falling while chips keep ripping, the AI rally is in transition, not in trouble. But if both roll over together, that's a different conversation. And 3. Whether market breadth improves or keeps deteriorating. Records on narrow leadership are common at major tops. They're also common in the middle of long bull markets. The pattern this week will tell us which one we're in. The peace trade is dead. The rally isn't. At some point, those two facts have to reconcile. The question is just whether it's the rally that gives way, or the geopolitics that resolves. We cover the days the markets actually move, typically a few times a week, more when things get wild. Hit subscribe so you don't miss it. We'll see you next time.